Me and Dana.
I got you. All right. Well, welcome to our Tuesday night. What is cryptocurrency meeting? I appreciate everybody that is here this evening, and I apologize. I probably would have some more people here, but I haven't been on social media really, so I didn't share the links or anything. So that's probably why the attendance count may be low. But I'm really not worried about attendance more so than the education, right? So we're going to go ahead and get started, and we always start every meeting with prayer. So Miss Phyllis, can you just start us off today with prayer?
Yes, dear Father, we just want to thank you for allowing us to meet again to learn additional information on crypto and to help us re-educate ourselves on what we have learned so far, dear Lord. Keep us and bless us. Bless our leaders, our trainer that's patient with each and every last one of us, dear Lord. Continue to bless us and keep us throughout our journey. Keep our minds open for new information. In Jesus' name we pray. Amen.
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 Amen. Bless you. Bless
Bless
you.
you.
All right. So it have been a very interesting week in crypto, all the way around. Most cryptocurrencies have actually been stable all week. It wasn't a lot of volatility with the crypto. So if you're keeping your eye on cryptocurrency, you just realize that it's gonna go up and it's gonna go down. Those are the two things that are guaranteed in this crypto space. So this course or this class every Tuesday is about learning from the beginnings of cryptocurrency. So I go through the internet and I try to find videos that I can feel can be help you with your success in understanding cryptocurrency. So this week when we went through the last set of classes, I was sharing the videos, and so what I said last week is we're going to start over, and we're going to start from what is cryptocurrency, and we're going to readjust how we presented the information. So last week we talked about the mindset. So the mindset that was dealt with last week was more of an entrepreneurial mindset, having your doing your own thing. And it wasn't necessarily about cryptocurrency, but it was just understanding the two mindsets that you need to have just in business and in your regular life, right? So that's rich dad, poor dad. So this week I found a video on hodling your coins, right? So the mentality for the cryptocurrency, right? So now with this video, you'll be able to understand what holding your crypto is versus trading the crypto, because we hear a lot of people talk about buying low or selling high with regular stocks, and so cryptocurrency, that same mentality is over here too. But there's a difference between people who hold their coins and people who trade the coins. So for me, I always say if you're holding your coins, you're not worried about the ups and downs of cryptocurrency. You're just going to buy your crypto and then you're going to hold it for over a year or 2 years. And so no matter what it does, up or down, you're holding on to that coin. Somebody who trades the coin, they're looking for that coin to go up so they can sell it. And then they're going to sell it. And then they look for it to go down so they can buy some more. And so those are two totally different mentalities. And you really have to pick which mentality you're going to go with, or at least have the understanding of the two. So the first video, I'm just going to show just a small information on cryptocurrency, and then I'm going to get into the video on holding and trading your cryptocurrency. All right. So if you have a pen and a paper, make sure you pull that out because you want to go ahead and make sure you have this information written down. So just give me 1 second. Let me see, make sure everybody's in the waiting room.
Howard, quick question,
Sure.
please. I noticed when I did the BSC scan, there was another thing that popped up on my investment. It said Titano and then Titano Dow.
Well, Dana, let's talk about that separately, because then people don't. Some people may not know what you're talking about, so we want to keep it straight like this. But I'll just call me afterwards. I
Oh,
got you.
okay.
Hmm? All right, let me go ahead and share my screen. And so we did share this video before, and people did like this video. We got a lot of good feedback on this video as far as the introduction to crypto. So just let me share my sound.
NFTs, everyone is talking about cryptocurrencies right now, but good lord, what does all of it? So welcome to the one video that will take you from crypto new to crypto news. Let's be what it is. Why? What I've actually invested in myself and the dark side. Okay, so when society was in its early stages, there was no such thing as money, all called a stage one. The only way to buy something off someone was to go up to them and be like, oh, I really like this.
We can't hear it.
All right, hold on. Share. Thank you, Carol.
The issue with a system like that is that even though you might be perfectly
Can you hear it now?
Yes.
Okay.
happy to give up your horse, you just might not want a cat. So that trade will never happen. But that's where currency came in. Stage 2, coins, which, because they were made of precious materials like gold and silver, everyone just accepted that they were worth something. You've heard of the British pound, right? Well, the reason they're called pounds is because £1 literally just used to be £1 of silver. And so all of a sudden in a trade, it doesn't matter if you don't want my cat. As long as I have coins, we can still trade for your horse. Even if you have no use at all for the silver, because it's a precious material, you have that reassurance that you can take that coin, give it to someone else, and trade for something that you do want. Convenient, right? But then this evolved to stage 3. As banks became established and governments had control, we realized that as long as there was trust in the system, we could move away from needing to carry blocks of precious metal towards something even more convenient. Paper money. It does the same thing, but now the money doesn't have value because it's made of pure silver, it just has value because the government says it has value. Like this £10 note here in the UK, the note itself is just made of, well, it's actually made of plastic. They changed it recently because it's more durable. But if you look closer, you can see that all this actually is the Bank of England promising that they will pay the bearer of this note £10. Really, this is just a receipt, a kind of proof that you own a certain amount of money. But as technology has improved even further, we found even more convenient ways of storing and trading our stuff. We're now in what I would call stage 4, where more people than ever are buying things online and using credit cards, and really when you're at that stage, we don't see our money anymore. It's not about on a spreadsheet. Like when I buy a music album from Amazon, all that's happening is that my bank adds an entry in my spreadsheet that says Aaron now has $10 less, and then Amazon's bank adds an entry that says they have $10 more. So, the reason I've given you this entire intro is to give you context on where cryptocurrency sits. It's seen by many people as the most convenient era of exchange ever. Stage 5. The way to think about a cryptocurrency is that it's 100% virtual. I know the logo for Bitcoin kind of looks like a physical coin. It really is a Bitcoin now. But with crypto, there is no gold, there is no silver, there is no paper. It really is just the transfer of digital assets. But the core concept is exactly the same. Think of them as literally just running spreadsheets of who's paid what to who. But instead of multiple banks keeping their own separate records, with crypto, there is just one enormous spreadsheet of every transaction made using that currency. And this is called a ledger. Okay, we all love a good spreadsheet, but what's all the fuss about? Why is everyone going crypto crazy? Well, there are some distinct advantages to a currency system like this. One, it's decentralized, which means that while every transaction of a given cryptocurrency is all recorded on the same ledger, there are many, many copies of that ledger. And anyone who is a part of the network has one. You might have heard of cryptocurrency mining, or Bitcoin mining. Well, all that is someone who set up a computer to crunch through transactions on their copy of this ledger or spreadsheet. There are already about 1 million Bitcoin miners around the world, and Bitcoin is just one type of cryptocurrency. The reason they're doing it? Well, if you dedicate your computer's power to mining, say Bitcoin, then you will earn some Bitcoin as compensation. So the result of this is that if I go into a store and spend 5 Bitcoins on something, then instead of just checking with one bank's records, the shop instead checks with every single computer on this network if I have enough. And assuming I do, each computer will give the go-ahead, and then every single one will update their records independently. So because you end up having this many copies of exactly the same ledger, it becomes very easy to tell if anyone's trying anything fishy. Who bought this? Like if I try to hack into someone's computer that's on the network and give myself more money by adjusting figures on their copy of the ledger, it's not going to get through. The system will realize that 99.9% of the copies on the ledger are saying one thing, but one of them is saying something else, so it must have been tampered with. There's very clear organization to the system, and I think people believe in it because they see the future as open, traceable transactions, much more so than having like some bits of the record over here and other bits over there. And I know it seems complex at this point, but as we go through, I think you'll realize that for a lot of people, in a way, it's simpler. There are plenty of areas in the world that have internet access, which is all you'd need for crypto, but don't have access to traditional banks, which require a lot of paperwork and documentation. 2, and I've kind of implied this already, but the main perk of crypto is that you don't need banks anymore. Because everything is stored by the people on this ledger, you can make international payments almost instantly instead of it taking half a day with no spending limits. Plus, you don't need to worry about exchange rates, you don't need to worry about interest rates, and even transaction fees are close to zero, for some cryptocurrencies that is. But this is where the real fun begins. I'm fun at parties, I promise. The reason that cryptocurrencies are called cryptocurrencies is because they're secured by cryptography. And one example of this, which a lot of the major cryptocurrencies like Bitcoin use, is blockchain. Now, people often get confused by this. Blockchain is not Bitcoin. Blockchain is not a currency itself. Blockchain is just a secure type of ledger. So you know that big spreadsheet that everyone has that's recording transactions? Blockchain is just a way of organizing it, funnily enough, into blocks. So every time I pay for something with Bitcoin, that transaction is recorded as a block. Each block contains transaction data, like who was paid and how much, a hash, which is a unique identifier, and the hash of the previous block in the sequence, or the last transaction that was recorded. And the pivot on which this system rests is that if something in a block is changed, then that block's hash will change. You might be starting to see where this is going. Because each block also contains the data of the previous block, if the hash of the block here changes, then the next block will no longer have a matching hash with it, and so every subsequent block after that one becomes invalid. So if you combine this with what we talked about earlier, this whole idea of a million different users all having their own copy of the blockchain ledger, then if I wanted to fraudulently create a transaction that, say, paid me money, I'd have to not just tamper with a block and every single block after it, but I'd also have to do this on at least 500,000 computers around the world, so that the majority of computers in the system are also consistent with the one I've tampered with. Probably not gonna happen. Whereas just hacking into someone's dollar account and sending myself money, that does happen. And it's sometimes as simple as just literally guessing someone's 6-digit PIN. But there's a massive jump between that and trying to hack into 500,000 uncorrelated computers at once. Okay, so cryptocurrencies have their issues. I'm literally going to get to them in a minute, but hopefully you can see why some people are excited about them. And that brings me on to investments. You've probably heard of people putting money into cryptocurrencies, and all that means is that they're exchanging normal currencies, like dollars, for cryptos, like Bitcoin. They're hoping that those cryptocurrencies become the next big thing, and therefore suddenly shoot up in value, at which point they can then either spend them, or just exchange them back for more dollars than they bought them for. There's actually a term for cryptocurrencies that skyrocket like this, going to the moon, or mooning, but that can mean something very different depending on who you talk to. But the one decision that someone would have to make at this point is which cryptocurrency? Because we've talked about Bitcoin, but Bitcoin is just one of over 4,000 different cryptos already, and each of them have different properties. For example, Ethereum, which is the second most invested in, can process transactions even faster than Bitcoin. There's one called Cardano, which is considered to be technologically superior. There's one called Litecoin, which has a newer algorithm. And if you are enjoying this video, then a sub to the channel would be delightful. So let me show you what I've done, and disclaimer, this is not in any way at all financial advice. I'm not recommending this. I've literally only put in a small amount of money that I am comfortable losing, and to be honest, the way I'm seeing it is more as an optimistic gamble as opposed to a strategic investment. The only thing that you absolutely should buy is one of these hats. Best purchase I've ever made. That is financial advice. So I've put 40% in Ethereum, 20% in Polygon, 20% in Cardano, 10% in Cartesi, and 10% in Litecoin. And this portfolio has basically gone up and then down, and then up and then down. And then, honestly, you probably get more consistency from Wish.com. So crypto is in a pretty weird place right now. And this brings me on to its problems. The dark side. One of the main ones is exactly this. The reason I think a lot of people don't take crypto seriously is its volatility. Because these currencies are so new and they're completely digital, unlike, say, the market for gold, no one really knows what they should be worth. And so you find that crypto prices are quite heavily speculative. They're tied to the news cycle. Like when a glowing article comes out about them, prices spiral upwards, but then when Elon Musk posts a tweet that puts them down, they go way down. Two is the fact that they're not really accepted as a form of payment in, well, most places. Like, yes, I can now book holidays with crypto, I can donate to Wikipedia with crypto, but there's been a lot of companies who are pretty back and forth with it. Microsoft, Tesla, even Burger King are examples of companies who said they were going to accept Bitcoin, and then they said they weren't going to accept Bitcoin.
What happened?
Howard, it froze.
Howard? I'm not sure if he's frozen.
He'll be back. He stepped away probably.
He'll be done.
Either that or it could be the weather down there because he had problems before, which affected his internet.
Okay.
Stupid, but this one's a head scratcher. So
I'm sorry, did my video go out?
Yeah, it stopped playing.
Oh, shoot, I'm sorry. My whole computer, I'm sorry. I apologize. Yeah, I had that computer issue earlier. I think it's the weather
Mhm.
out.
Right.
Let me try again, I'm sorry. Share.
depends who you ask. And
Do you remember
four,
where we are? Where it went off at?
The guy was talking that's talking now like that.
That same guy, yeah.
That's fine.
All right.
Mhm.
It's only like like a couple more minutes on this one before I get into the other one. I'm sorry.
there's also a pretty strong sentiment that because there's no real policing or regulation on crypto right now, it's like the perfect currency for criminals. But to be honest, I think the data speaks for itself on that one. According to Chainalysis, 0.34% of crypto transactions are criminal, up to 5% of normal cash transactions are criminal. And I think that's because it's a bit of a misconception that currencies like Bitcoin are anonymous. They're actually pseudonymous, which means that even though your actual details aren't visible to everyone, your public key, your unique identifier, will be permanently baked into the blockchain upon making transactions with it. So cash is just a better currency for most types of criminal activity, because by its very nature, it's untraceable. Don't ask me how I know that. But as well as the negatives, there are also just some straight up odd things that have come about because of crypto. For example, you might have heard of an NFT, a non-fungible token. If you haven't, you might want to take a seat for this one. I don't want to call it stupid, but this one's a head scratcher. So you know how now you can go into an art gallery and you can pay to own a painting? Well, now thanks to the blockchain, you can pay just to have digital ownership over something. So it doesn't stop anyone from using or sharing that thing, but all it means is that you'd effectively be the owner of the original, and they'd all be sharing copies of it, even if, for most intents and purposes, they look and behave identically. Like, a lot of these NFTs are literally just JPEG images. I think the reason some people find this stupid and kind of funny is that there's a distinct difference between buying an NFT and buying the rights over something. So if you buy the rights over something, that's a very legitimate purchase because you can create merch or sell licenses. With an NFT, you can't. The original owner still has all the reproduction rights over that piece. All it is that you're using the blockchain to prove that you have some ownership over that asset. But clearly, just being able to say that has some value, because an NFT of this Gucci ghost sold for $3,600. The CEO of Twitter, Jack Dorsey, he sold the first tweet he ever made as an NFT for $2.9 million. 5 words! I could do that. Any takers? And this one just blows my mind. This photo, which is basically an overview of one guy's pieces of art, sold for $69 million. Very nice. To clarify, this literally just gives the buyer some digital ownership over a JPEG image. And finally, you might have heard of Dogecoin. Dogecoin is based on the same tech as Litecoin, but it was created as a joke. People started sharing it and putting a bit of money into it because they thought it was funny, but that propelled its value to the point where now we have people who have actually become millionaires just because they bought Dogecoin when it was cheap. It's an interesting world out there. If you did find this useful, then do consider sharing it with a friend or family member.
Is it over?
Yeah, I'm not sure.
All right, here we go. All right, so that was our first video on what is cryptocurrency. Just to bring people up to speed, it looks like the majority of the people on the call already know what crypto is. Welcome, Miss Karen. I think that's the first time I've seen you. Miss Karen, welcome to the call. But this next video is going to be about the mindset, right, of holding and trading. So with this video, I will be asking questions in this video. So take some notes. And I hope that you enjoyed the video. I really did enjoy watching this video. So I trust and believe that you guys are going to enjoy it as well. So
almost everyone that enters this space is Welcome back to Bitcoin Daily for another video. Today, as you can see in the title, we are going over HODL versus trading. Alright guys, HODL versus trading is what we're covering today. We get this question all the time. Almost everyone that enters this space is pretty much a beginner. And they're always wondering, like, what's HODL and what's trading? What's the difference? What's more profitable? Where can they make more money? What's safer? You know, so they always have a lot of questions. We hope that this video can answer all your questions, because if you're watching this right now, that you probably have the same exact questions. So before we get started, please, we ask to give this video a like, drop a comment, and give us a follow. Turn on those alerts. That helps us so much to continue to grow this channel and help the crypto community as we give, you know, we put these tutorials and free content out every single day. So let's jump right into it, y'all. Let's do this. So first of all, things to note: it is not a good idea to borrow money via loans to invest in Bitcoin or other cryptocurrencies. It's an even worse idea to purchase cryptocurrencies with credit cards, as they will charge you cash advance fees and sometimes a higher interest rate. Do not invest money that you can't afford to lose. Let me read it one more time. Do not invest money that you can't afford to lose. Very, very important. The majority of cryptocurrencies aren't going to survive. If you're invested in a cryptocurrency that goes to zero, you're not going to get bailed out. Conduct extensive research on the coins you're looking at and be careful of recommendations you find on social media. All right. And then one more note that's not on there, but I feel it's something that I should, you know, tell you guys. I am not a financial advisor, and this is not financial advice. Okay, guys? Just make sure you note that. These are just, I'm just putting what I've gained as far as knowledge and my opinions and what my experience is trading. But I am not a financial advisor, and this is not financial advice. So let's jump right into it. HODL, the long-term strategy. What is HODLing? HODL itself is cryptocurrency slang which originated when an evidently drunk Bitcoin Talk user made a post where they misspelled hold in the face of falling Bitcoin prices in 2013. So in a previous video, the 9 terms, I think it was called 9 terms that you should know if you're let me start. I'll tell you guys right now. If you guys look at the video right here, 9 terms every crypto trader should know. We go over actually exactly that that forum and how that all happened. So if you guys want more on this story, you guys can check that video out. HODL is essentially a long-term approach where you purchase and hold Bitcoin and other cryptocurrencies without regard for short-term fluctuations in price. It involves investing in one-off or regular sums of Bitcoin and other cryptocurrencies, holding the investment for a long-term period, for example, 1+ year or until another condition is met. This is the lowest effort and easiest strategy to adopt. It's based on the assumption that the price of Bitcoin and some other cryptocurrencies will see a rise in real value over long-term time periods. This approach completely ignores short-term volatility, which is an inherent feature of the cryptocurrency markets. Even if the price of Bitcoin drops off a cliff, investors committed to the HODL strategy shouldn't do anything unless the fundamentals have changed. Once you've set yourself up with HODLing, this is a passive investment strategy. So this strategy is simple, but not stupid. Despite its simplicity, HODLing shouldn't be goalless. You should and might want to consider the following points. First thing, what cryptocurrencies are long-term winners, right? That's the first thing you should be asking. As I've already touched on, most cryptocurrencies are going to collapse. Their solution might become redundant. Another cryptocurrency might do a better job. Critical members of the team might leave the project, etc. There's a bunch of reasons why a project can collapse. If you're intending to HODL a cryptocurrency for long term, you need to be confident about where you're putting your money and have a rationale for why it'll increase in value. All right, number 2, how are you going to invest? You have fewer options to consider here. You could invest in chunks whenever you want, regardless of what the price is doing. You could determine price levels you'd be happy to buy into your cryptocurrency at. An example, buy the dip, right? BTFD. You could set up automatic regular investments into your chosen cryptocurrency, like dollar cost averaging. So we have a video on this as well, guys, that we'll touch on. You don't have to pick one path. You could do a combination of all the above. So those are different options that you have for putting your money in. Now, what are the conditions for pulling your money out? When you invest money into anything, you likely have aspirations that it'll grow in real value. But when you're going to cash out, when are you going to cash out and realize these profits? Are you going to cash out in 5 years or 10 years, or is there a specific price point where you'll cash out instead? You can also determine what percentage or fiat value you draw out under certain conditions. Your cryptocurrency investment could go the other direction too. If you're not prepared to lose all of your investment, then do you want to have predefined conditions where you exit the market? So those are all questions that you guys should be asking. Before even investing, like you should have an answer to every single one of these questions before you even invest. All right. So why might you HODL instead of trading? So one reason could be you don't have the time or motivation to actively invest in cryptocurrencies, and you just want to easily gain some long-term exposure to projects you care about. Right? Another thing is you want to invest in some cryptocurrencies which you think have strong long-term potential. maybe you aren't confident in your technical analysis ability and have no interest in learning how it works. Hey, that happens all the time. You know, there's some people that just don't care to learn the skill, and they just want to make money, you know, so they rather hodl. So if this is the approach that you want to take, how do you actually invest in Bitcoin or any other cryptocurrency you're interested in? So again, we have videos on this, guys. We've covered all of this for you guys. Like, we've been slowly creating these videos every single day and covering all these base points, so that once you're ready to go, once you have your money ready to go, ready to jump in, boom, you just watch our videos and you're all set. So the two different videos that I recommend for you to watch is the top 10 Bitcoin questions answered. So this is Bitcoin for dummies, Bitcoin for beginners. You know, these are all super the most basic questions that you can think of. I answer them here, including what is Bitcoin, how does, you know, what for over a year had profitability. There are two strategies that I recommend you guys to go over, and two videos that I recommend you guys to watch. All right. Now, trading, the short-term strategy, right? So first of all, what is trading? Trading is a short-term approach where you're looking to maximize your returns and beat any gains, which could be achieved by just holding cryptocurrencies. This is a high effort approach which can be time intensive. It embraces the volatility of the marketplace, as price fluctuations offer the opportunity to profit from drastic changes in prices over short time periods. This is the opposite of the long-term strategy I defined before, which looks to evade short-term volatility. In order to trade, you need to have some level of technical analysis ability. You need a firm understanding of how the market works. You also need to put time into monitoring the markets and searching for opportunities you can take advantage of, because cryptocurrency markets are fast moving and always on. All right, so for trading, the number one thing is following rules and being disciplined about it. So the first thing you should be asking when looking for a trade setup is, where's the opportunity? You need to look for what cryptocurrencies have short-term and medium-term potential. The cryptocurrency market is massive. There's more than 1,000 projects listed on CoinMarketCap. How will you know or find what coins to trade? You need to decide that based on your edge and criteria for trading a currency or asset. For us, we stick with high volume and high market cap coins and trade strictly based on technical analysis. So I don't really trade based on fundamentals. If I like a project and a project's potential and fundamentals, I usually just invest long term in those projects. But for everything else, like, I'm usually just in and out of trades. I'm day trading. So the next question is, what's your trading plan? This is probably the most important question that you will have when trading. Before entering any trade, you need to know exactly where you're entering and why. Then you must also know exactly where you're exiting when you're wrong. Because face it, you will be wrong many times, and of course, where you're taking profit when you're right. Then you need to incorporate risk reward and position sizing to tie it all together. So those are all different things that you need when you're trading. You need to be able to hit all of those when trading. You should know answers to all these questions before you ever even jump into a trade. So why trade, right? Why not just hodl? It seems so much easier. Why trade? So you might want to trade if you're confident in your own technical analysis ability and want
It's his service.
Yeah.
Mm-hmm. It's okay.
It's a good one now.
Yeah, we have interrupting our service at home.
Mm.
No, I do. How was my pastor?
I'm good. I'm good.
Good.
Yeah. Getting ready.
That's right.
Oh, he said his service sucks.
Yeah.
I guess there's some storming going on.
Yeah, he said earlier when we lost service, he was having an electrical storm going through.
Hmm. Yeah, we're supposed to get some storming here, but so far we're okay.
Yeah,
Yeah,
we just had a lot of rain.
yeah, we got rain. Yeah, we were joking with him and said storming was going on. He was supposed to turn everything off and sit in the dark
That's right.
and not be on the call with us. But
Not on a computer, not on the television or nothing. That's
exactly,
He
that's
said,
what
I can't imagine something like that. I said, that's how it was. You do not do, you turn that TV off. It's lightning, thunder, turn off all that electrical equipment and sit down somewhere.
I still have cousins like that now. They won't talk on the phone. They won't do nothing.
That's it.
yeah, that's why we were joking. We say you were doing all that teaching with us while all this was going on.
Exactly.
You supposed to be sitting down in the dark, quiet.
Yep. Yeah, but they wasn't raised like that. We wasn't scared.
Yeah, that's right. We
He's
couldn't do those things.
trying to get back in now.
Mm-hmm.
There he is.
So it is time intensive, as I said before, especially when you're new, because you really need to be paying a lot more attention. But once you become profitable, once you kind of figure it out, once it starts clicking for you, it really doesn't take much time. You just kind of I come every morning, I glance over the charts. It takes me 5 to 10 minutes. If I see something I like, I'm a market. So I set up alerts on my chart, and I'm alerted straight to my phone if the price gets to that point, you know. So I scan 10 20 different charts within a 15 20 30 minute period, depending how long I take looking at the chart. And if I see the setups I'm looking for, then I spend more time on it. If not, then I move on to the next one. It's that quick. Another reason is you've got a decent amount of capital, which can be leveraged to generate sizable gains from small percentage movements. Or better yet, once you're a profitable trader, you can use leverage with your capital to make even more gains on small moves. If you've been so for an example, if you've been hodling this year, you're up 80% in profit, give or take. If you bought Bitcoin January 1st, 2020, at this point, give or take, you're up around 80% in profit, because that's what Bitcoin is year to date right now. But if you were trading every rise and fall, you'd be making profits on both sides of the market. You use leverage, then you'd be making even more. So that's why trading can make sense for some people, because now you're not only trading when it's going, you're not only gaining from when it moves up, but you're gaining when it moves up, then you're selling when it goes down, then you're buying again when it goes up, then you're selling, you know what I mean? So you're keeping that money. Every time it drops down, you're not losing value on that because you're not holding it, right? So you're only gaining value as it rises. So that's why it makes sense to trade, and that's why it's so much more profitable if you're a profitable trader. Remember, that's a big if. So what should you do? What is right depends on your circumstances, motivations, and goals. What's right for one person is the exact opposite of what another should do. 99% of investors in crypto have been profitable hodling, unless you bought, of course, at all-time highs in 2017-18 and never averaged down, or if you sold. That's the only way you're a losing trader, really, a losing hodler or holder, is if you sell before you should, right? And then another thing to keep in mind, another number to keep in mind, 90% of traders are not profitable. All right. So what should you do? Well, I can tell you what I do, right? So I hold about 30 to 50% of all my investments passively in cryptocurrencies that I think have long-term potential and are safe bets. It's mainly just Bitcoin and Ethereum. I'm not looking to do anything with this bunch for a few years, regardless of what happens. So 30 to 50% of my portfolio is locked up in Bitcoin and Ethereum. Those are my two safest bets, the two coins I believe in the most, the two projects I believe in the most. So I have the majority in Bitcoin. My second biggest holding is Ethereum, right? So Bitcoin and Ethereum make up about 50% of my portfolio at any given time. It could be between 30 to 50%. It ranges. Sometimes I cash out, stuff like that. There's no exact number. I know people want exact numbers. There's no exact numbers in trading, guys. So it's ranges between 30 to 50%. I use about 5% for medium-term bets, or what I like to call lottery tickets, on coins which are undervalued or volatile. If I think a cryptocurrency is overvalued, I might take everything out and keep it liquid so that I can take advantage when the market corrects. I use around 20% on other top 10 market cap coins and any other project that I believe in. So again, this changes all the time. And then I use about 30% of my capital of my full portfolio to actively trade the markets. Okay. Oh yeah, and then I try to keep around 10% cash to BTFD. If you don't know what that means, buy the effing dip. So I think that's pretty much it for that. So you guys could use my numbers as a starting point and then just kind of configure it and make it your own, however you prefer. So the bottom line of hodling versus trading. If you don't have a lot of experience, you should enter crypto investing and or trading with caution. A conservative and cautious approach involves averaging slowly into positions and out of them. If you do this, you limit your risk. Successful investing is all about managing risk. Very important. Hodling is easy but has some serious logistical problems, especially for those who go all in at the top or who hodl through every all-time high. Trading is harder and has more pitfalls to watch out for, but it'll set you on a path where you'll be conditioning yourself to do what you'll need to do eventually, and that is buy and sell at opportune times to realize profits over time. Given this, we can say that a slightly nuanced version of hodl, where you average into and out of positions, is the most beginner-friendly strategy. As one progresses in their journey, they're going to want to be able to trade effectively and can make sense for even an inexperienced crypto investor to ease into trading out of the gate. If you're going to trade, start with small trades, like 1% of your entire portfolio per trade, and no more than a few trades a week. Use stops and start learning about technical analysis. We have many tutorials on trading in our trading tutorial playlist, and we are posting more every week. So if you can get down the basics, like how to tell a bear market from a bull market and what sorts of targets you're looking for to take profits or to buy, you will start approaching a point where a buy and hold everything only strategy will likely no longer be your best choice. That is to say, almost every cryptocurrency investor will benefit from refining both a long-term hodl strategy and a shorter-term trading strategy. Hodl might be the best strategy for a new investor, but buy the top and hodl to zero is actually one of the worst possible strategies I can think of. Since this is true, we can't just fall back on HODL period. We need to have a slightly more nuanced strategy that accounts for the reality being most will get into the crypto market late, and HODLing will simply mean exposing themselves to the pressure to sell over time at a loss. All right, guys, so that is the end of it. I hope you guys, I hope this made sense for you guys. I hope you guys picked up something out of this, which is why I created it, because I
All right. All right. So I hope you guys enjoyed that video and it was informative for you. So let me see. You guys can hear me, right? All right,
Yes.
cool.
We can hear you,
All
Howard.
right. Okay, great. So I'm going to ask a question and I'm going to give away some free cryptocurrency. So raise your hand before you answer. And first person raising hand, go ahead and call on them. So what is a predefined condition? Just give me one predefined condition. Or what is a pre-combined pre
Howard going again?
Yep.
I apologize. My internet, it's the weather out here. So I
You
apologize.
don't worry about that. You can nothing you can do about that.
It's all good. All right. So I think Miss LCP had their hand raised to answer that question. Unless y'all answered it while I wasn't here.
Nobody said nothing.
Okay. All right. So all right, LCP, go ahead, unmute yourself. What is a predefined condition?
I'm not positive, but is it like the data structure or the encoding format?
That is not the answer. Nope, that's not the answer I'm looking for. Let me see. Miss Verna?
Yes, a predefined condition would be determining a project that you like.
That's correct. That is one of the predefined conditions. What kind of risk are you willing to take? Right? Are you going to be a holder? Are you going to be a trader? What is your goal when going to there? Are you going to hold for 5 years? Are you going to hold for 2 years? Right? Conditions. All right. So can anybody give me 2 reasons to hodl or hold? 2 reasons to hodl or hold. 2? 1, 2? No, I'm gonna come back to that one day. Can somebody
I'm on
go
my
ahead?
phone and I'm on my phone and I'm driving. May I try to answer that?
Yeah, go ahead.
Okay, 2 reasons to huddle would be: 1, you're new, and 2, your strategies as far as how you want to oh, okay, you're new,
You
and
knew that's one.
it's one of the strategies. It's one of the strategies to whether you're going to be a short-term or long-term investor.
Yes.
I don't know, because if you're short term, you wouldn't really be hodling. So I don't know. So two reasons.
Okay.
2 reasons to hodl. So 1, you're new, and 2, you don't have the time to trade.
Oh.
Okay.
All right, you don't have the time to trade. So if you don't have the time, you buy your coins, set it and forget it, right? And then 1, you're new, so therefore, of course, you don't know what you're doing, so you're just gonna hold on to them like a lot of us that invested into a lot of these altcoins. So those are 2. So what are 2 reasons to trade? What are 2 reasons to trade?
Make my.
I mean that is a reason. He gave 2 though, but
Short-term.
that's fine.
Short-term approach and can move the money fast.
No, that's not what he said. He said 1, you have the time, right?
Mm-hmm.
And 2, you're confident in your technical analysis.
Okay.
Oh, yes.
Right.
Okay.
So
Right.
when you're trading, you want to make sure 1, you have the time. Trading is a very time-consuming thing because you have to monitor the charts, right? And you have to be able to look at the stop losses and all that different kind of stuff. So you have to have the time, and 2, you have to be confident in what you see. And basically, I'm studying charts and believing that the pressure points, the validity points, the bear markets, and so you have to study that. So those are 2 reasons that you have to trade. You're very confident, and you have the time. All right. So when it comes to trading, I'm not a very good trader. I've already chucked that up. I lost so much money in trading. I should have just hodled. So I had a lot of Ethereum, and I tried to trade, and I lost a lot of money. Where if I would have just hodled, I would have made so much more, right? So that is something that I was able to learn early on in this crypto space. Like if you have crypto and you're really gonna believe in the crypto, you gotta hold on to it. Miss Phyllis, she's been in Ethereum since Ethereum was $128 a coin, and we've seen it go all the way up to 4,700.
Yeah.
So we've seen a whole lot of people in the meantime, my mom as well. We seen a lot of people in the meantime, they sold at 600. They sold at 1,100. They sold at 12. They sold at 15. They sold at 22. They sold at 25. And they was begging to get their money out. And then it goes to 4,700 and all those people like, I should have helped.
Yeah.
Right, we all went. Anybody from the program we in. If anybody was in there, we all started when it was between 100. Ethereum was $128 and 200.
Yeah.
And I can't count on my fingers and toes on how many people when it just got to 700, they was banging down my door to cash out.
Cash out.
Right.
Well, I would think that. I don't know. I think a good strategy is to, and correct me if I'm wrong, you put so much money in. I think that after it gets, maybe 2 or 3 times your money, you want to take your investment out and then just let it ride, on the house money.
Yeah, that is a very good strategy. And then, like he said in the video, everybody's strategy can be different.
me personally, when I speak on, we were in Ethereum was 128. Most of us got started with like $8 to $20. And so we been pulled out a lot of money, but still, once it got to 600, people seen the numbers get so high. But let me say, for instance, when I was teaching everybody to just buy the crypto and hold it, the all-time high of Ethereum was 1,400. So my encouraging everybody to buy Ethereum was telling them to hold it until it hits 1,400 again.
Okay.
So once if they put in 200 and it doubled and it hit 4, yeah, they could pull their money out, but nobody left their money in there to really see. Not nobody, I say that, but not nobody, because there were people who did it. But a lot of people didn't leave their money in there to see 1,400. And so that was the goal. Like the all-time high was 1,400. Everybody grabs some crypto, right, Miss Phyllis? Everybody grabs some crypto, and we just want to ride this Ethereum out till it hits 1,400. And so people put in money, but as soon as it hits 600, 700, they want to pull all their money out. Not just their investments, but all of it. Like I wasn't even answering people phone calls when they wanted to pull their money out because I knew where Ethereum was going. And so some people pulled out again 1,200, 1,500, and it got all the way up to 4,700, right? And so it wasn't too many people who got to hold their Ethereum to 4,700 to $4,700, except for the people who just didn't realize it was still in their wallet. So I did a whole video on where I could go into the wallets and show people they had money. I was literally calling people and asking them, hey, do you have your wallet still on your phone? And some people still didn't.
You were right.
Uh-oh, looks like he's gone again. Oh, no. Oh.
But Howard is right. He did do that. He did call people.
To see if they still had their wallet open. Is that what he said?
Yeah, that they still was active. They still had their wallet. I got you. Some people buy, and the little bit that they did have, it had grown.
Yep. It did. Some people see 10, 20 times, 10 times their money, 40 times their money in just a short period of time, because it literally did that in about less than a year and a half. And so the goal is to, if you're going to buy cryptocurrency, really be prepared to be in the market for a while. Previous video says 4 years, we should be in the market at least. This video said it's going to be 5 years or 10 years, right? And so we get into projects and after 3 months or 4 months, we don't see the growth that somebody who got in the beginning seen, and we become discouraged. And we say our money's not growing fast enough, or it's going down, et cetera, et cetera. Understanding that if you're a holder, you don't have to worry about the ups and the downs, because the trader are the people who make it go up and down. The traders see highs and lows, and they plan on the market, and that's how they accumulate more coins. Mm-hmm. And so they play with the market. So it's not always people fear selling. It's not always people not believing in the project. It's not people not agreeing. It's traders. It's people with money that are not manipulating the market, but playing the market the way the market is supposed to be played. And so those of us who are new, we get frustrated, we get fearful because we don't really understand it. So we want to make sure that we understand the difference, again, between holding and trading.
So
and
what about?
Go ahead.
I have a question then. I want to take us back to the WeTube. What's your perspective on the WeTube right now?
All right, so only because I'll get into it specifically. My perspective is, do you believe in their mission? Right? And so everybody who got into, or any coin that you get into, or any project, do you believe in their mission? Right? So if you believe in WeTube's mission, which I do, it's a very, very wonderful mission, global veterinary services, helping animals in life treatment, long-term care, etc. That is something that plays on the hearts of people. That is something that people love, animals. So I think that is a very good mission, especially as the fact that you can actually see the work that they're doing. Now, there's a business behind it that requires pushing, it requires marketing, it requires strategy, it requires moving. So therefore, that's going to take time. So when I came into WeTube, Yeah, I made some money early because I was one of the first people. Well, not the one of the first. I came in like holding number like in the 600s, but that's still early relatively when it comes to cryptocurrency. So I know that if it's gonna blow, if it's gonna get big, it's gonna have to get listed on different exchanges like CoinMarketCap and CoinGecko, or even Binance, like they said last night. It's gonna take time to get there. But once it get there, it's going to explode. Just like you heard people on the video, they talk about Dogecoin or they talk about Coin. They talk about these coins that they got 2-3 years ago while they were super low, like the prices we have now. But it took 2 years for them to reach a penny or 20 cent or 30 cents. So we don't have to get based on the hype that a coin is going to hit a penny in a year, in the 6 months, or it's going to hit 22 cents in 6 months. No, it's okay. If you're here for the long term, it's all about building. We know. So that's how I feel about the cryptocurrencies that we're in. However, on the flip side, I have to be honest. I had talked about a coin called LockPay probably like 2 weeks ago, and the coin was like at 1 cent, 1.5 cent. And since then, now that coin is like it dropped all the way down to 0.003%, right? So yeah, I mean, and then they start another version. So sometimes you just don't know, right? So you got in, you get out, you get your money back, okay. But sometimes you just don't know. So but what did the project have? It was about making money. The project is about making money. So if the project is about making money and it doesn't really have a strong source, then you know it's kind of like a gamble, right? And so it's good for it. Good then it might not be a long-term coin, or it could have been. It all depends on the project, right? So that's just kind of how it goes. I'm in the crypto space, but Move Moon, I believe in the Move Moon coin, which is the other coin that I talked about. From when I bought it, it's still up. From when some other people bought it, it's down a little bit. But again, it's still long term. It's still long term. People get frustrated. Oh, I didn't make with such a. Nobody's gonna make more really than with somebody who came in at the beginning. But when the coin dips low, take for instance, we too dipped so low last week. If you would have bought in last week, compared to where it's at today, you would have made a 600% return on your money.
Oh.
But you just have to buy when it's low. But people are like, oh my God, we too is dropping so low. What should I do? Buy.
Yeah,
buy.
yeah.
It's hitting a low. And if you believe in the project, when it goes low, that's when you want to buy.
Yeah.
Right. And if you don't believe, then you still wait and you hope that it goes up high enough so that you can sell and get out.
Yes.
Right. So you only lose money if you sell. Right. Remember that you only lose money if you sell. You put in $1,000 and then you go look at your coin. If you put in $1,000, you get 1 million coins, and then it goes.
Oh Lord.
The weather could be worse. So
Yeah.
Yes, it could.
Yeah.
That's flat.
Uh,
My phone went out. My phone went out again.
Yes,
Yeah.
it did.
Oh, I'm sorry. So where else stop? I'm sorry.
You saying something about if you put 1,000 in, it goes down somewhere around there.
So yeah, so if you put $1,000 and you get 1 million coins, if you look tomorrow and that coin value goes all the way down to $26, but you still have $1 million worth of coins.
Yes.
So we don't have to worry about, oh my God, it's so low. You still got 1 million coins, because in crypto, coins is what matters. And so think about it real quick like this. If you go to Chuck E. Cheese and you win all the tickets at Chuck E. Cheese, right? You put your money in the machine, you win all the tickets. When you go to the prize booth, it don't matter how much whatever the toy is in the back. It could be a cassette player, it could be a DVD player, it could be anything, it could be sneakers, whatever they have back there. They don't give you the dollar value to ask you for what? The tickets. If you want that radio, it's 100 tickets. Now, how many other things can you get for 100 tickets though? Now we might look at those things with 100 tickets as, oh, the radio, that DVD player might be $50, but The headphones are only $20, and then the toy model car that's worth $100, but they still only 100 tickets. So crypto is the same way. It's eventually where it's going to say we'll be able to get to the point where we'll say, all right, well that's going to cost you 1 million coins. It's not going to be about the dollar value. Everything will be placed on the value of coins. So if you have billions and billions of coins, now you can just pay with your coins. The dollar value won't matter. So we don't have to get frustrated. If he have a global backed cryptocurrency, or we have a cell phone service with Move Moon, then just say in order to be part of that veterinary insurance, it won't be $60 a month. It will just be 125 We2s every month.
Oh, I see.
Or it might be 200 We2s every month, but the dollar value won't matter because they're accepting We2s. Or how much will my cell phone service be with Move Moon? Well, it might only be 500 Move Moons per month to run on this service. So it doesn't matter value. But if I put a dollar value to it and the service is $50, then 1 month it might be 1 million Move Moon. The next month it might be 2 million Move Moons. And so you don't want to do that. So in crypto, the goal is that we're paying in that crypto value. So it's going to be 2,500 Move Moons every month. So you got $1 billion. You good for the next 20 years if you want to be.
Oh my God.
Right. So that's all about where we're going in the crypto space. I like that little Chuck E. Cheese analogy because that's how it really works. Right. So if you got crypto, if you like a coin, you give me 1 million coins, I'll give you this. I don't care how much they worth. Just give me 1 million of them.
Gotcha.
All right. All right. Let me see. Successful investing is all about what? Successful investing is all about what? Ms. Van?
Successful investing is about knowing how to read the charts, knowing when the best time is to buy and sell, and being confident in your ability to be able to adapt to the situation.
I text him. I don't know what Calvin doing.
He did he gave it. It was two. It's 2 words that he gave. But you're right. I'm not gonna say you're wrong, Ms. Van, because that is true. All of that is true. But it's 2 words that define pretty much what you were saying. Ms. Vernon?
When to come in and when to come out?
No, I mean kinda. But he gave 2 words for it.
2 words.
2 words. Successful investing is all about managing risk.
Okay.
Managing
risk. Yes, managing risk. Yes.
Managing risk. So everything Ms. Van said, right? The same thing you said, Ms. Vernon, but managing risk. That is the main thing. Managing risk. People go out here, like I've seen traders blow accounts. I've seen a lot of people lose money, just period. But you want to be good in managing your risk. I'm not good at trading personally because I'm a gambler. I go to the casino, I spend money. I'm not a good money manager. That's not me. I have never been. I remember my mom might say, I remember one time I lost some money for the bakery and I lied about it. And I told my mom it fell out my pocket or something stupid. I told her. And then we were watching The Raisin in the Sun with Puffy, with P. Diddy, when he took his mom money and gave it to the Bulls. And I was like watching it. We watched it as a family. I was like, Mom, remember I told you I lost money. I was like, I didn't. I felt so bad because of the movie. She was like, I already knew you went to the casino. I'm like, what? And so I tried to I got a gambling problem. She was like, son, you don't have a gambling problem. You have a discipline problem. Like she didn't allow me to wallow in my self-pity and make excuses and all that kind of stuff. But she told me, you don't have a gambling problem. You have a discipline problem. So you have to be disciplined whenever you're moving your money around. And so I still I have better discipline now, right? But trading it's a very, very risky environment. So you want to use caution and manage your risk accordingly. And two more. I knew he was gonna laugh. But what percentage of traders are not profitable? LC, who raised their hand? I'm sorry, I cleared the hands before.
I did.
Oh, Ms. Van, go ahead. I'm sorry.
90% of traders are not successful.
90%. 90%, and I'm in that 90% of traders are not profitable. So you'll see all the time people teaching classes, you'll see all the time, and that's why people jump into these different platforms and these auto traders and stuff, because doing it yourself is almost 90% of traders are not profitable, and I can attest to that.
Well,
Now,
I'm not trying to be a trader.
No, that's cool. Yeah, don't be a trader. Be a holder. But no, you see, like they said, if you see it go to an all-time high, you want to take a little bit of profit. That's okay. To wait for it to come back down low and maybe buy some more. That's how you ease yourself into just a little bit of trading. You know what I mean? Just to kind of earn some new tokens or whatever. And I'll say that because I think about it like this: when we two was on a little dip or whatever, I sold some. And then I have bought some of the Move Moon, right? So Move Moon went up and it doubled my money. And so I took back out my profit and We Too went down and I bought more We Too.
Mm-hmm. Okay, so, that's a good strategy.
Yeah, so I sold, but it don't always work. You know what I mean? It don't always work because if Move Moon would have went down, then I would have been stuck in the same place. But when We Too, I sold 1.5 billion coins. But when I bought back, I was able to buy back with the same amount of money, and I actually got 3 billion coins because it went up, right? So that's what traders do. They sell high, drop the market, buy low, and stack their coins. All right. So what's the percentage of investors that have been profitable if they hold? No, you already answered. What percentage of investors have been profitable if they, Ms. Gwen?
99%.
99%. 99% of investors have been successful if they hodl. Yep. So if you would have bought Ethereum, and we'll just go just from 2020. If you would have bought Ethereum in 2020, you would have got it for under $1,000. You would be winning right now. If you bought XRP in 2020, you'd be winning right now. If you got Tron, 2.5 cents, it's 9 cents right now. You would be up 400% right now. If you bought Bitcoin in 2020, it was at 10,000. It's at 32,000. You would be up right now. All right.
You say XRP? You said XRP?
Yeah, XRP in 2020, you could have bought it. I think it was like 12 cents. I think it's like 29 cents now. I haven't looked at my XRP because they're going through a lot of stuff with the XRP. I think XRP is always a great coin to still have in your portfolio because they are the poster child of what cryptocurrency is going through. And once they go through the courts and everything else, and everybody knows exactly what they have to do to be compliant in the United States, XRP is going to blow up and cryptocurrency is going to come on the scene. That's just my true belief. So, but all cryptocurrencies from 2020 are up. Now, at the beginning of 2022, you're going to be down. If you bought at the beginning of 2022, then you're not up. Then you're definitely not up, but it's still, we're only 6 months into 2022, right? But if you 2-year strategy, everybody will be up 300, 400%. And this little bit of 7.
What are you burning, girl?
This
That smells
200, 300% that we had an increase in all of those cryptocurrencies, we wouldn't be struggling so hard against this 7 and 8% inflation, right? So cryptocurrency protects us against inflation. So we want to make sure that we are accruing as much cryptocurrency as possible. So that is our call for this evening. Does anybody have any questions before we close out for the evening?
Hey, Howard, can I ask a question?
Sure, of course.
Okay, so how does one buy crypto and not be emotional about it? I'm going to use weed too as an example. You got in at a good time, and now you see the money part of it has gone all the way down, but you have the tokens, and you're saying to yourself, should I continue to buy more of it? You know, I might just throw my money at something. You believe in the cause, but you're looking at, I think everybody got into weed to make money right now. And the thing is, we all have to change our strategy, because this is going to be more of a long term than when we all came on board and everything was roses. So now we're in the part because they're still developing. And a lot of people came in because, hey, look, they had their eyes set on, you know, using this money to invest in something else. So we all came in with different, you know, aspirations. Oh yeah, you're not making this money now. So how do you still stay in the crypto market and not become emotional about it and say, okay, you know, you're putting money to the side. This is the money you're going to invest. This money I can throw away, so to speak, but not be emotionally attached and be able to look and say, okay, long term, I can see this, and not get so emotional about it.
That's a really good question.
That is, and my bishop says something to me, and he said something to me a long time ago, probably about 9 years ago. He said, money is the closest thing to a person's faith, right? So if a person have money, then everything's all good. They may not even, you know, pray all the time, you know, because they have money, they can just do everything. But then when their money is tight, that's when they start really calling on the Lord. That's when, Lord, I need you. When money's good, not so much. But when it's tight, that's the money is the closest thing tied to your faith, right? And so when you're investing into a crypto, you have to set yourself a time frame. When Dr. Breakthrough introduced the We2, his strategy was set it and forget it. It also was, when you double your money, pull your money out and let the rest ride, right? So I don't know. Some people had a different misconception because what they seen was people triple or quadrupling their money. So they felt when they came in, the same thing was going to happen to them. But my question would be, when you do that, where are you going to take the money and put it that you're going to gain that much interest or earnings anywhere else? Where else can you put your money in an American space where you're going to bring back 20% in a month or 20% in a couple of days? And so it becomes the mentality of, one, greed, right? Because we had calls where somebody put in money, it was like, I put in $100 and it only went up to 130. Like, bro, that's 30%. And there's a level of disappointment, and it should never be a level of disappointment if you make 30% in a day, because where else can you go to make that type of return on your money? So if we're going to invest, I like to look at it like, if you're going to invest your money anywhere, how much of a percentage, or I'll take it in the stock market or in a business or any ideas that you have on American money, what is the return on your investment that you're grateful there? If you're going to put $10,000 into a CD or an IRA, when you do that, they sit you down in the meeting and they tell you, in 20 years, this is where your money going to be at. They don't never tell you, well, in 1 year, this is what you're going to get. Why? Because if you put $10,000 in an IRA, after a year, you're going to earn like $30.
Yeah,
but they tell you got to lock it in for 2 years. You can't touch it, et cetera, and they're going to give you 1.5% or 2 point something. So if you're happy, or you know people that are happy with that, or your 401k brings you back 10%, 11%, we'll max it out 16% a year. Then if you get into a crypto space, then your limitations, or your expectations rather, should be really set at 16% as a high. So anything over what you would get anywhere else, you should be excited for. So when you see the money dropping, though, you know that I'm not going to touch this for a year. I'm not going to get emotional. I won't even look. I know it's hard not to look, but you call me, you be like, you see We2 today? No, because I didn't look at it. I only look when somebody tells me.
Right.
And the
So-
other thing is the one thing that Howard is doing is educating. Okay, the more education you have, the less emotional you'll be because you understand the market. You understand that this is how it works. I had a lot of people, not a lot of people, but I had a few people who needed money. They wanted to make that money because the pump, it was, the pump was on. Come on, let's do this, and all the hype. And I was telling Howard, I said, but you got to dispel the hype because we know we're educated. You know what I'm saying? I said, so while they're hyping it up, I said, you got to be able to dispel the hype because we already know. So education becomes very key. You know how the market is. And then when you're talking to people, you don't get people hyped up about how much money they're going to make. Okay, it's a long term. You want to hold it. And so people ask me, what do you think I should do? What do you think I should do? Well, I know that you need money because you need to move. So the money that you have, you need that money to move. So maybe you might only want to take $50 of that money and buy some We2, but you don't want to take all your money because there is no guarantee. So if I suggest that you take as much as you can and put it in We2 because it's going to double or triple, I would be wrong because I can't guarantee that. So I never tell people if you're coming into this crypto space. Now I know that I can. I'm been in it long enough to know that I can come in and I can double. I can take some out, still leave some in. I kind of know the game, but I'm not going to risk anything. And so when they hear the hype, then they're willing to risk, but then they get disappointed. And so you can't do both. So being educated is the key to keeping not becoming emotional, And so if you don't invest emotionally, then you won't get emotional. Okay. And so, but my pastor says that emotions are energy in motion. So if your energy is negative towards something, then you're going to have negative emotions. All right. So let's keep our emotions in check, keep everything in check. If you want to invest in a new coin, great. Like Howard says, I'm going to invest in it and making a point of looking at your coins and not looking at the value of the coins, because when it goes up, if you sell it, that's the less coins that you're going to have. But if you hold on to it, when it goes up, you're going to get the value of those coins, the amount of coins that you have. So this education that Howard is sharing with us is very key to our emotional mindset because you understand the game. Okay, when you understand the game of something, you can handle it. That's the way it is. In the stock market, the people that invest in stocks in the stock market, they understand the game. Doesn't mean that they don't get upset. Yeah, but they can't just go in there and pull their money out anytime they want to because they understand the game. When they invest in the CDs, they know that if they pull it out before the term, then they're going to get a penalty. All right. So either they're going to be willing to pay the penalty or they're going to leave it in there. Why? Because they understand the game. And so this education is all about understanding the game. When you understand the game, you can control your emotions.
Absolutely. That's great, Mom. That was really good. And that's the bottom line. I couldn't have answered that question even though I tried better than that.
You did good. You did good.
Yeah, I tried. Thanks, Mom. I appreciate that. But
we have to understand that everything we do is a mindset.
yeah.
Okay. Everything that we do is a mindset. How you see things, how you feel about things first begins with your thought process. It begins in the mind first, and nothing can change until your mind changes. And so when we have the right mindset, no matter what we're doing in life, if we go into it with the right mindset, then we can manage those emotions that come. Doesn't mean that they won't come, because we're emotional beings. So we're going to have the emotions, but we can manage them a lot better, and we can encourage other people. And then we can explain that to other people instead of getting on the emotional bandwagon, because that's what happens. Somebody starts complaining about it's going down. Then the next person looks at their wallet and they're complaining it's going down. And then this one's looking at their wallet because it's going down. And so then it's a snowball effect.
Mm-hmm.
And so we have to have our good mindset. So now that we can encourage people, yep, it's down today. But you know what? When it comes back up, you're going to be so happy. Today may be a down day, but tomorrow's going to be brighter. The mindset.
And we always have to remember, whatever crypto we're in, it's the confidence. If you have confidence in that crypto, you want everybody you know to buy that crypto. Period. You want people to buy that crypto. If you're invested in something, you want them to buy it. If you're invested in Apple, you want all your friends to have Apple products. If you invested in Tesla, you want all your friends to be driving a Tesla. Cryptocurrency is no different. If you invested in Bitcoin, you want all your friends to buy Bitcoin. If we in Move Moon and we want all our friends to buy those coins. We want everybody attached to our friends to buy their coins. And that's what we want to do. And so, whoever got the most people, the coin market cap go up, that's the coin that's going to be worth the most money. That's what we do know. That's why the Doge is a meme coin. It doesn't have anything behind it, just people who buying it. That's it. That's the only thing that really encourages the crypto. You can have the best project behind the crypto, but if you don't got people buying it, the crypto won't be worth nothing.
Mm-hmm.
Crypto is a peer-to-peer network, period. You need people. It's impossible. So if you in crypto, just know that you're dependent on people for your crypto to be successful. So it's your job, no matter what crypto you're in, to tell people about it. Unfortunately, if the crypto go down, those same people is going to be upset with you because they lost money, right? So you just got to make sure that you understand the risks before getting into any of these cryptocurrencies. And so
don't buy into the hype.
There you
go.
go.
Don't buy into the hype.
Don't buy the hype.
Don't buy the hype.
Set your mind up.
If you buy the hype, then you're going to be disappointed if you buy the hype. That's why education is important. So you don't buy the hype. You can get excited about something, but don't buy the hype.
Yep. Don't buy the hype, and set your goal at the beginning on how long you're going to be in there. That will kill all your emotions. If you know, hey, I'm going to put this $1,000 in there. I don't care what it do. I'm not going to touch it for a year. Or like they said, set a financial goal. So you say, hey, I put 1,000. When it hit 2,000, I'm pulling 1,000 out. So when it hit 1,000, 2,000, pull your 1,000 out. Now you shouldn't even look at it for another 5 years. Now you shouldn't even be touching, because that's the emotion that go with it. Like, oh, it's up today. Should I grab it? Imagine, like I said, last week, Bitcoin went all the way up to 60,000. Imagine the emotional roller coaster that you went through if you bought it at $100. How much? And I had another video, but it was only like 9 minutes, and I'll play that next week. But how much? How can you really hold on if it's 100 and it go to 6? And you never seen 6 before, or go to 19,000 and it never went to 19,000 before, and you become an instant millionaire? Are you going to still hold, or are you going to go ahead and sell? You're going to sell something, of course, but are you going to sell it all because you're scared that's going to go back from 19,000 and then it go from 19,000 all the way back down to 2,200? So when it goes back to 2,200 and you bought it at 19,000 because you seen it come all the way down to 2,200, are you going to sell it? You bought one Bitcoin when it hit 19,000, it's at 2,200 and you still have one Bitcoin. Are you going to sell that one Bitcoin because you don't have faith in it, or are you going to find $2,000 to buy another Bitcoin so that when it goes back to 19,000, you now have two, but you only spent 21,000 and now it's worth 40? Do you have the wherewithal to see it all the way through to the end? And so that's really my goal, is to make sure that when the new people that I'm associated with, are we going to see it through to the end, which may only be 4 to 5 years, because I'm only in the game 2 years myself. I made over $500,000 in 2 years off of a one-time $8 investment in cryptocurrency. That's it. And that's why I'm here to teach and educate, that we can all really do the same thing if we're willing to share this crypto space with our friends. You don't have to be rich because you can buy crypto. You can just be rich by sharing crypto and accumulating it at the same time. So that is our meeting for this evening. Let me see. Anybody want to volunteer to close this out in prayer before I pick somebody? I sound like the prayer call, huh, Mom?
I think Charlene should close us out in prayer. I wasn't on. Who started us?
She closed us out on our meeting earlier.
Oh, okay.
If she's willing to, that's great. And I'll say this real quick before we close out. I have a joke that I tell when I do my Christian comedy shows, right? And Ms. Van, this is really to your question. When I go to church, I always conversate with the Lord first about how much I'm going to give, right? And so if God give me that amount, I don't care what that pastor say while he up there, I'm only giving what I got in my pocket. So if he called for a $500 line, I know this $20 in my pocket ain't going to reach that $500 line. If he called for that $100 line, I ain't going back in my pocket to get $80 more. He gonna have to come down to this 20, right? So if I won't, so the market is the same way. I don't care the hype. I don't care what you try and sell me. I don't care none of that. I got $20 that I'm gonna put in here. I'm gonna let it ride. And so that's how you get that emotional mindset. You know what I mean? Anybody could make you go in your pocket for more, and then if it don't come through it, I should just led with that $20. You know what I mean? I didn't get my blessing and none of that. I could just pay my $20. You know what I mean? I put $500 in here now. Now I got to pay a bill tomorrow, and I was the pay. No, I should have just stuck with my 20, and I would have been straight. I'd have been able to pay my bill, but I was excited. I was emotional. He hyped me up, and he got me. Right? So now I ain't got no phone bill, can't call nobody. You know what I mean? And I can't even go back and get that $500. Right? So we gotta make sure that if we invest like that, this is what I'm going to give. This is what I'm putting to it, and this is it. And even if we see it jump up, or you don't have to go back in your pocket, just hold out. Just hold it. If you think every coin is going to go to a penny, like this is one of my mindsets, and then we can close out. If you think every coin is going to go to a penny, accumulate enough coins that you'll become a millionaire if it hit a penny. And if you know you have enough coins that's going to make you a millionaire, then once you reach that amount of coins, just go ahead, lock them up, and don't look at them until somebody say, hey, you know that coin hit a penny? You're going to be like, what? And you're going to go pull out your little ledger. You be like, look, I got $1 million. Right? So if you know that's what you want to be a millionaire, 10 million, 20 million, how many coins I need, how many We2s I need to be a penny? I need 100 million We2s to be a millionaire. I got 3 billion. I'm good. That's $30 million if it hit a penny. I don't have to worry about nothing else until that coin hit a penny. So I'll put my coins away and I'll just share with my friends. Y'all got some We2s? No, well, y'all better grab some. But when it hit a penny, I'm gonna be a millionaire. And you have get all your friends to help you push that coin to a penny so you can become a millionaire. And that would be my strategy. Miss Charlene, you mind closing this out?
Okay. Thank you, Howard. I needed that. Father God, thank you for allowing us all together here tonight to get wisdom and guidance from our leaders financially so that we can become better investors. Thank you, Father, and hopefully that we all can sleep well tonight, knowing that we will become better investors, and that the $20 that we have will be enough for us to invest if that's all we have. And just want to come to you and just say thank you for bringing us all together. Amen.
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 Mom is getting married.
Amen.
Man.
Getting married next Saturday. So after next week, a lot of you guys know we're in the platform with Forsage, and we're going to be going full steam ahead. And that's the platform where we'll be able to take $8, both of us. I turned it into over $500,000. My mom turned her $8 into over 350,000. And so we both started with $8. So we're gonna make sure that we're teaching y'all just to do the same thing. Take a little bit of money and let's accumulate some crypto as we educate people into the crypto space. All right. You guys have a wonderful evening. You guys can unmute yourself and say good night. And invite somebody to come out with you guys next Tuesday and learn about this cryptocurrency. Good night.
Okay,
Thank
good
you,
night.
Howard.
Good night.
Good job.
you.
Good night.
Thanks, everyone.
Stay in the